price being maybe this balance area here, and obviously into the London Open, the bottom edge balance area is down into this area here. So when we tie these two pieces of information together, inflation break-evens are actually trading higher. The bond price is trading lower. It's almost too good to be true. And yet there it is. I mean, it's not something we can hide. It's not something we can avoid. And there's your buy trades into the bottom prints. I mean, you would have been buying at the top prints as well. I mean, not just the bottom prints. With that amount of inflation break-evens in your favor, you'd still be buying top prints, guys. So you're going to be bidding into these areas. You're going to be bidding into everything you can get your hands on. I bought 5s, and I bought 10s, and I bought 30s, and I bought ultras. You'll see from the tweets, that's why I was mentioning the 5s becomes quite a good trade. And you can see that we got this amazing buy-side response. I thought that we were going to have to distribute into this area here because it was kind of flattening out for a little bit here. But, you know, I thought we were going to have to distribute some business here. I did take some profits, absolutely, in that area. But we started to pick up the value again. And obviously, if you were obviously inclined, you could have bought back in again at this downtick phase here. And obviously, the takeaway from that was absolutely ballistic in terms of profitability. It's a brilliant trade. And obviously, in terms of a bracket structure, we had a bracket kind of structure here in the background. I quite like this as the bracket measure. And obviously, based on that bracket measure there, I was obviously going to start looking for profits around about the target measure, which is obviously going to put us into a target price area about here. That's exactly where the price stopped. And obviously, the sell-off came in. Now, that sell-off, you can all recognize that sell-off. You might also be saying to you, but surely that's us getting value. Yeah, but to be fair on that argument, you also had value here. That's why buying, Miguel, buying a leader on a downtick can be a disaster waiting to happen for a lot of traders, correct? So unless that orange line starts going up, I can't buy it there. If I buy it there, I got a massive stop out. So do I buy it there? Do I buy it here? Do I buy it here? Do I buy it here? Where exactly am I buying that massive discount that we've got against the break-evens? Where exactly am I going to buy it? And am I just going to keep buying it until I've not got any account left? Because it's all discounted against the break-evens, guys. Or am I going to be a sensible trader and realize that perhaps the bond is leading? Does everybody see the significance of that? Yes? No? Because if you're buying a dropping market, number one, there's obviously supply coming in. So what the hell are you doing? Are you a commercial? You suddenly managed to come into and inherited a couple of $100 million to start trading in the markets to become a commercial trader? Or have you just forgotten one of the key ingredients of a successful trade, and that's value moving, and a lack of supply. Value moving plus a lack of supply is going to get commercials crossing the spread, which is a prerequisite for you to do business. So in other words, there's a massive difference between a value that's doing this and a price that's doing that, to a value that's doing this and a price that's doing that. Massive difference. The spread is still the same. The spread is still getting very, very significant, absolutely. But there's supply coming in here, for God's sake. What the hell? This is a commercial trade, not a retail trade, not a locals trade. There's no supply coming in here. So because there's no supply coming in, what are the commercials going to do in this? They're going to start jumping across the spreads to get business. And that's going to help you off these bottom edges here to make money on the demand that's probably going to start showing up soon. There is a world of difference between these two setups. The spread is still the same for all those algo builders that think the spread itself is the most important determinant, which it's not, of course. The only way that the spread is the most important determinant is if you're going to be selling the orange line and buying the candles. Then you can obviously buy the downtick, which you'll have to do anyway, but you'll sell the uptick. First you'll sell the orange line, and then you'll wait. You'll sell the orange line, and then wait, and sell the orange line, and wait until you see an opportunity to start buying the candles, because that's where the supply's in. So if you're going to spread trade this, by all means, buy this blue line as it drops and sell the blue line at the top edge. But if you're not going to do it as a spread trade, you've got to make sure that value is in your favor to buy into that storyline. You've got to make sure that there's a big macro value and it's not pouring back in against you, and that you've got a couple of nice balance area prices to lean against. And that's what we're trying to find. So the value should be going up. So it's very important for oil traders who are trading the likes of the RBOB, for example, and the crack spreads. The guys that trade oil, Cliff, Sammy, Ian, they'll all be able to tell you exactly this point. That the crack spread, obviously the crack spread is made up of oil and RBOB minus oil, of course. So when the crack spread is rising and the oil price is like this, then it's a great trade. But the crack spread can be rising when oil prices is doing that as well. Well, that's not as good a trade, is it? Because the crack spread is rising because oil prices are falling. Not because we've got any definitive idea that the RBOB market's bullish. There's no suggestion. So what you can end up doing is you would end up buying oil here and here and here. And you could end up buying like a commercial all the way through the crack spread rising here, and you would end up getting your account absolutely busted. So the best way to trade the crack spread is when it's rising and oil prices are balancing and the supply has dropped off in terms of numbers, in terms of deltas, in terms of the book. And then we can buy into oil against the crack spread. It's a very, very, very important feature of trading relative value, unless you're spread trading, of course. But I don't know any of the guys in the room just now that are spread trading. So therefore, you've got to make sure you are on the leader. So yes, the answer is that the break-evens are still very bullish, but there's no way I'm going to touch the bond price. Not a chance, guys. Not a chance. Because that is dropping. So I'm not going to buy bonds. That would have been bloody madness. In fact, I would have lost my account by now. I'd have lost my account, right? The bonds is leading this price lower, isn't it? The bonds leading the break-evens lower just now. So there's no trade for me. It's not even close to being a trade. If that orange line balances out, I now have a macro value that I can take advantage of. Macro value. If I start seeing the volume dropping off on the supply side, if I start seeing some very large block prints getting traded as a commercial, there may well be some commercial now taking advantage of that inflation break-even narrative. And obviously then I might want to lean against that as a local. I might want to take a couple of scalp trades, but until that orange line goes up, not on your Nelly am I going to go near that bond trade with a barge pole, guys. Not a chance. So that's what you start looking for, isn't it? That's what you start looking to try and deal. You wait for those ideas. You wait for those ideas to form. You're not trying to fade a bottom edge because of the value macro in the background. You're trying to capture it when it turns. You're trying to capture when the supply is gone, and that makes the buy on the bonds very, very safe. Yeah, Tim, it's just about identifying what's moving. If your price is moving, you shouldn't be trying to fade it. Unless it's coming into a balance area, a stop run, for example, of a balance area, you shouldn't be trying to fade it. You know, you can try and scalp it every now and then when you start seeing a block print, but that's, you know, that's you being a local, seeing some commercials, trying to recognize early that the commercials have a reason maybe to buy into it. And there is a big reason why the commercials want to buy bonds, but you know, we've got to be aware of that. We've got to be aware that at the moment there's a lot of supply in the bond market, and there's no way you should be going anywhere near it until that supply gets used up and gets taken out. Then we could probably find that we might be able to buy bonds all afternoon. We might be able to buy bonds all afternoon. So you can see the difference. You can see the bonds, you can see the difference between those two storylines. If we look at the break-evens led the bond price. The bond price went straight flat, didn't it? Look at the difference, see it? The bond price went flat. Do you see how different that is, Tim? So because the bond price is flat, the break-evens are leading the bond price. So even when we get a little bit of supply coming in here, that drop in the break-evens gives us the macro buy trade on the bonds now, doesn't it? So that little drop gives me the ability to pick up those discounts. Otherwise, I probably would have had to cross the spread like every other commercial to get some bonds done. So you can see we've made it all the way back to the bottom edge, guys. I mean, that's ridiculous because you've had value literally the whole way down here to buy that. And if you try to buy that value the whole way down here, you've been annihilated as a bond trader because you haven't understood the concept of value at all. So great question, Tim. So there's no way I'm buying bonds. You can see exactly why. You can see the bond now has collapsed through the bottom edge like an absolute juggernaut. And that, therefore, the call that I made on bonds was absolutely fantastic, absolutely sensational. Absolutely sensational, guys. Pretty good? Yeah, pretty good. Saved you all a fair bundle of cash, guys, that's for sure. Saved you all a fortune.